Hello, hello, hello. Welcome, everybody out there in Facebook land. My name is Judah Hoover, and that guy, like, way over there is Josh Weidman. And the gentleman in between us is a good buddy of mine, and Josh's as well, Rocky. We're go ahead, Josh.
Yeah, well, what I wanted to say is you veered away from his last name so well there. And I have stepped in this pile so many times, and I'm just so impressed by it. Rocky, it's Lalvani, right?
Correct.
Ah, yes, I got it. I'm sure I've gotten it wrong like 4 or 5 other times when we've done these interviews. So anyway, yeah. So we're that's all.
So Rocky, I don't even know how long I've known you, my friend. 5 or 10 years, something like that. You're a real estate investor. I like the way you do real estate investing, because some of your properties are like A++. You always go for kind of nicer, bigger properties that you then also have to put a little bit more down on. We don't have to get too much into that right here to introduce you, but I've always learned a lot from you. And respected the wisdom and knowledge that you bring to the game. And it's been one of the blessings of being a heavy networker and running a club like I do, because there are people like you who, just in real estate, but also in business in general, from a bigger perspective, you've definitely got your head on your shoulders. So why don't we start off by just saying, Rocky, why don't you tell our audience a little bit about yourself?
So I've had a very mixed kind of life, in the sense that I had corporate jobs, and now I'm no longer in corporate. I got sick of them. Real estate, both rentals and flips, and doing that. And now I'm building my own business. My biggest mistake was waiting to get into real estate. So I was selling real estate when I was in college. I had my realtor's license. Like, I understood how to do everything, but I never took action for myself for a long, long time. So that was probably the biggest mistake I made. Had I bought all my real estate back in the 90s, life would have been a lot better.
Right.
But you got to appropriately do it, and you have to do what works for you. And that's kind of cool. So that's kind of the bigger story. I like to do real estate without the hassles. And so that's why I'm buying A++ properties, because then I get much better tenants, hopefully, although we did have one project go horribly bad, but you survive and thrive.
Let's pause here. Okay. So you're talking A++ properties. What's that really look like? I mean, are you talking about penthouse apartments?
No, Josh, like the Hetrick property, that we're working on that flip for.
Yeah.
Rocky would buy that property, so like a $280,000-$300,000 house, and rent it out. Not like a super luxury, like kind of actually middle of the road for like where normal people homeowners would live.
Sure.
Kind of like that step up, not entry level housing for homeowners, but like step up. So like 3-bedroom, 4-bedroom, 1.5 bath, 2-car attached garage, those like median homes.
Yeah.
But there's almost nothing out there like that in the rental market.
Well, and it's really funny you say that, because I have been, okay, Rocky. Judah, you are such a good fill-in for Rocky. It's an amazing. We were talking about this. I'm often the one who does that. That's why I laugh, because that's my anyway. So Rocky, all right. So what's your exit? Like, what's your end game with the investments, if that's the case?
Well, so the reason I bought those properties originally, it was 2011. I didn't know what was going on in the economy. I went through the stock market crash. I'm like, hey, let's try real estate to lose money in next, to see what we can do. When I bought those original properties, in the back of my head, I was like, I don't know what's going to happen to interest rates. Right. I was expecting inflation. I was expecting all those problems. So I was like, I'm going to buy houses that if everything goes to hell, I can give these houses to my kids. Like I'm just planning 10, 15 years ahead. In the meantime, I'll make a little bit of money. And so that was kind of the initial thought process behind buying those properties. And back then we were picking, because nobody wanted to buy houses back then. So we got them at good deals at that time. And they didn't need a ton of work. And so it was kind of neat. So I had 4-bedroom, 2.5 bath, 2-car garage, 2,000 plus square feet. And back then there were a lot of people who didn't want to own because they were still scared from 2008, 2009. Now, since then, the market's changed in that getting a good renter for those houses is very difficult because anyone and everyone can now buy, and the standards have, and people want to buy. And with rates continually dropping, it's becoming easier. So the rental market has shifted.
Well, Rocky, you want to? I think it's so interesting that you said here, and that it's kind of happening in the market, right? Why? Okay, so you have more people that can buy, so they're buying. That's one thing, one contributing factor. But I think also you have a squeeze in the inventory with these type of properties, because let's face it, if you bought it in 2011 for $250,000, that house is probably worth $350 now. And so if you can make $100,000, and it's like, why not? You know, maybe it's time to cash out of this thing. I think a lot of people are looking at it with that perspective and saying, I'm getting out. And so where you might have had, 3 or 4 people vying for as tenants for your properties, they also had 2 or 3 options. I don't think that's the case now either.
So I sold 2 of my properties last year.
Yep.
Simply because I could not find a quality enough tenant for the property.
Yeah.
And I just didn't want to deal with the hassles. So 2 of them went away. My thinking now is to buy the small 3-bedroom, 1.5. That's probably a lot closer to, well, in the old days, 150,000. I don't know, or 135,000. Now it might be 180.
Yeah, 180 and 200 is what you're going to be paying for those.
And I'm not buying, because at 180, 200, the rental numbers don't make sense. I can't get rents to cover it, so I'm out. At this point, I'm sitting and waiting. Same thing with our flipping. We haven't flipped in a year and a half because I can't get a good deal. Now, had I known what prices were going to do because of COVID, maybe I should have snatched some up in February. But who the hell knows, right?
Right. Well, and you don't have a crystal ball. You can only go by past data, and that's why these unexpected situations like COVID and like a presidential election that doesn't end until months after the votes are cast. Like the uncertainty is the problem. It's not even necessarily the financial climate or the economic climate. It's like, just stop changing things. Right?
Life is always going to be changing, and the rate of change is going to get faster. So you just have to be ready to constantly shift what you're doing. So don't say, like, here's my goal over here, out here. But the biggest thing is, don't say the way I'm going to make my goal is X, because X may not be the way to make your goal anymore. You might have to do Y, you might have to do Z, you might have to do A. Yeah. Being more flexible in how you do that is the important part.
Yeah, and trying different things. It's a principle I like to call fail forward and fail faster. So you've got to try some things. Rocky, tell us a little bit about, because I see you on Facebook a fair amount here, doing some Facebook lives and things like that, and doing some discussions and interviews and things like that. Tell us a little bit more about what your thrust there with that is for our listeners who may not be familiar with you.
So I got a major aha a couple of years ago. I thought business owners understood the business of business, and they don't. They don't look at their financial reports. They don't look at their numbers. Real estate people are just as bad. They go by the gut. Oh, I think this. And they don't put pen to paper on their numbers to say, is this true? Yep. What actually adds up to the end game? And so when I realized that, And I got introduced to Profit First, which is Mike Michalowicz book and system, which really it turns accounting and business to the way entrepreneurs think and that the way we want to do things. And so I partnered with them. And with that system now, I just help business owners, and they might be in real estate, they might be in other areas, ensure that they are always profitable. So instead of, most people are told that it's sales minus expenses equals profit, right? So profit is a leftover. What we do, and this is the way I do my flips, sales minus profit equals expenses, right? So when I go look at a flip, all right, here's the sale price. Okay. And then here's my selling expenses. Now here's my profit. Okay. And here's my cost. That's how much I have to spend on this house. And if I think I can do it for that number, I'll buy it. But if I don't think I can do it for that number, I won't.
Wow.
But I'm taking my profit up front off the top. Because if I'm not getting my profit, we're not doing this deal.
Wow, that is excellent.
Okay.
I have a buddy who said one of my first financial backers, and he was a contractor, but he'd been a contractor for so long that he had a bunch of money squirreled away, and he backed me on my first couple of deals. And he said, Judah, we can stay home and not make any money. If we're going to go to work, we should make some money.
That's awesome. That's
and I will tell you, and your listeners are probably not in the e-commerce space, but I can't tell you how many people I know in the e-commerce space with 7-figure businesses making no money. They're doing millions in sales.
I believe
that. At the end of the day, there's literally nothing left for them.
Well, then the e-commerce space is really hard too, because it's become really very competitive. And you're talking about margins where you have to do huge volume to make any kind of money. Yeah. Listen, you got to be in a business where there's little competition and long-term sustainability, right? Like,
well, yeah, I actually just learned this lesson with my kids, Josh. We've talked about this a couple times on the air.
Right.
But I just because I love books, and just because whenever somebody's dad died and they're like, hey, my dad has Nixon wrote 20 books or whatever. And somebody gave me all of them. And somebody gave me a bunch of Tom Clancy books. And somebody gave me I've got a bunch of hardback books that span so many genres on my shelf. And so I said to my kids, I said, let's figure out how to sell stuff online. We'll list a bunch of stuff and then we'll sell it. And then we'll take whatever money we make and maybe buy some more books or maybe do something different or whatever. We're losing money online selling free books. That's how hard it is.
Well, and
money. And I'm like, geez, well, how are people getting packaging for less than this? Oh, well, they have to buy 100 or 1,000 envelopes at once. And I'm like, I don't want to sink that much money into this business that I'm just trying to use to teach my kids some business lessons. You know what I mean? Yeah. The online space is hard. And if you're not doing your accounting, I can absolutely see how you could lose money real quick doing it.
And most people don't do the accounting. Most people don't put pen to paper. That's my skill set. So you go back 30 plus years ago, when I was in high school, I was teaching accountants how to go from paper ledger to VisiCalc. Right. And that's everything in my life is done on a spreadsheet. Our grocery list is on a spreadsheet that matches the layout of the store. So literally you're in and out of there in 15 minutes and you're not changing your eyes from that list and that goal. So it turns all the temptation off.
Wow. Do you think you could send that to me? That's awesome. That's phenomenal.
Well, it only applies to his grocery store. It only applies to me.
Yeah. You have to build it because you buy the same stuff every week, right? Yeah. For the most part. And so we keep the list up on the fridge. And when something runs out, somebody just checks it on the fridge. And when it's time to go, you're zoned. It's a game. I'm like, I got to get out of here in 15 minutes because I got to go get the kids. Got to run. Go. And we save money. And we never run out of anything.
I got to tell you something. That is amazing. That's like game, set, match. I mean, master level stuff. I get meticulous about stuff, but not like that. That is
I gotta tell you, that would be
level OCD. I love
that
it.
would be a game changer for me because I don't spend a lot of money on clothes. There's a lot of things that I don't spend a lot of money on. When I cannot tell you how many times I've gone to the grocery store for milk, bread, and eggs and walked out spending $100 because I was like, oh well, I might as well get this. Oh, I can get this, and it's not like cookies and crackers and crap. Like, I mean, I really like to cook, and I see stuff, and I'm inspired, and I'm like, oh, I should get that so I can make this with it and that, so I can. I don't have a lot of waste, but I spend way more than I should at the grocery store.
Yeah, well,
that's neat. So you're working on building that business right now. What else? What are your thoughts on where the stock market's going? I know you've played there before, and cryptocurrency and other things like that. What are your thoughts on all these other things that are happening out there, Rocky?
So right now, stocks are at very high valuations, and they are because interest rates are so low and money has got no place to flow. And so that's kind of an issue. And I don't know what to do with that because, like, what do you do in this craziness? And stocks are skyrocketing every day, and
Rocky,
you have to be ready to pivot.
Well, you bring up a really good point here, and this is, I think, where why I'm still bullish on housing, and it's that there's just so much money out there. Like, you've got this huge infusion from the Fed in, at the beginning of COVID, but in addition to that, you have such low interest rates that there's just this huge current of funds just being pumped into the economy from the top end. And so you have asset values going up. And it's
Josh, we lost you there. We heard you say asset values going up. You have asset values going up.
Yeah.
You got a bad connection.
So as asset values are going up, they're, of course they're going up because there's all this money in the system, but it's not as if the money's going to be jerked out of the system. So these asset values are going to, I don't see a way, some cataclysmic event that's going to cause a huge downturn in certainly single family residence and multifamily, residential housing. I don't think it's there.
Well, yeah, I don't know what event will cause it to hiccup. Something at some point will cause a hiccup. I don't know what that is. I can't tell you what it is. It could be COVID. It could be something else. As long as the deal makes sense, it's fine. Yeah. What you don't want to be doing is buying at inflated prices that you're flipping on,
right? And
the market drops underneath you because just as fast as it went up 50 grand, it could go down 50 grand. If interest rates go up 1 point, you're screwed.
Oh yeah.
And here's the point, though, that you have to keep in the back of your mind. Right now, interest rates are at 2.5% to 3%.
Mm-hmm.
They are not going to stay here forever. This too shall change. Right?
Yeah, but I think it's going to be a lot longer than we think.
It very well may be a lot longer than you think, but at some point it's going to change. So are you a short term? Are you long term? Are your rates fixed? As we're looking at larger properties right now, people are asking astronomical amounts of money for stuff.
Right.
And we're just like, there's no deal here. So unless it's a deal, I'm out.
All right. So, Rocky, let me ask you a question, because I think that especially in today's day and age, there's a lot of people who they look at real estate the same way, for the same reasons the average person looks at network marketing or looks at online e-commerce and those things. Like they've got something that they've got a need, either a pile of debt or a pile of bills, and they just aren't earning a lot from their W-2 job, and they need to do something different. So real estate is the vehicle, but other attractive vehicles are network marketing or e-commerce. And I find it difficult to find people who are willing to who have the knowledge and are willing to be and have the courage to be truthful about what's going on with e-commerce. And you said a couple of things here, and I don't know this, but I'm just going to ask some probing questions. I don't know this about you. I think I have some of these answers, but I'm just curious. Why doesn't e-commerce work the way that it's sold? when people say, hey, buy a product for $5 from China, bring it to the US and sell it for $20 on your own website or through Amazon, and I'll show you how to do that. You're saying there's people who are doing that and have millions of dollars worth of sales, but they have nothing left over. Why is it possible to build a successful e-commerce multi-million-dollar business but still be broke?
So here's what's happening. People are buying that $5 item and they're not selling it for 20. Maybe they were at one time, but everyone goes, hey, 5 for 20, then it becomes 5 for 19. And then he comes along and it's 5 for 18. And pretty soon you're at 5 for 10. Okay, so now you're at 5 for 10, which is wonderful. But at 10, Amazon is taking 30% and the shipping company is taking 10%. And now we're back in your book business. I've got free product and I can't even make money selling free product.
Right.
That's what happened. Everyone has pushed the margins down. Even Amazon's doing that. If you have a successful product on Amazon, Amazon's going, oh, look, they're making money over there. Let's put our product in place.
Yeah, they're doing that for sure.
So everyone's pushing the margins.
Well, and the issue that you have is you have companies that have a runway. They've got a decent runway and they say, you know what? I mean, you look at Amazon. They got 15 years of reinvesting capital over and over and over again and buying and building their own shipping company. They're going to end up taking over the private shipping space at some point. But, you have companies that can afford to lose money for a long time that are in these spaces. I mean, I was watching an interview with this guy from diapers.com, right? And they got this domain somehow, saw that there were big sales volume and nobody delivered. So they set up a delivery service and they lost money on every single pack of diapers, but they had add-on products. You can't do that in a typical e-commerce space if you are just selling one product, or if you are in an Amazon where it's like, 50 shelves of products for every single search item. And I think that the loss leaders are what people see loss leaders as a way to get their foot in the door, but the store has gotten, the size of the world now. And so everybody's getting their foot in the door. And like, I just gave a guy a deposit on Windows. I forget his name. I mean, it's ridiculous. I just spent it, and like I have the contract and all that kind of stuff, but this happened a half hour ago. You know what I mean? I do something online. I'm not even talking to anybody. And it's like a race to the bottom. It's crazy.
It is a race to the bottom. So you made an interesting comment. Amazon's got 15 years of cash flow, right? This is what I do for business owners. I teach them how to build vaults of cash outside their business, a little bit at a time, so that they have the flexibility to take advantage of things. Because let's face it, in the real estate place, all of our deals we did for cash, which means when we went to the table, we came in, we said all cash offer, close as soon as you want. Let's roll. I'm going to get a better deal than someone coming in with financing. So it's learning the principles, and this is not taught in school. We don't teach people how to build cash. I don't care how much you're making today, you're probably spending too much. You've got to learn to cut your spending, create the gap, and start to save money so that you can build wealth over time. How you make that money grow is up to you. It could be in a business. It could be in real estate. It could be in the stock market. But the first thing you've got to do is start creating that gap between what's coming in and what's going out. And most business owners and most people are horrible at this.
Right. Living below your means, not living at your means, living below your means. Now, Rocky, again, I have an answer here, but I'm interested in yours. That doesn't sound fun. It sounds like what you're telling me is I have to be on a diet. I have to be on a money diet, and I can't eat any cake ever again, and I can't have any fun. And you're talking about living on a very strict budget. That doesn't. Why would I do that? I like spending money.
We all like spending money. The question you want to ask yourself is, do you want to constantly be tied to somebody else in money stress, right? So if you've got a job right now and you're living at the edge, how are you feeling about work? You're your employer loves the fact that you're on the edge, because now he knows you're showing up every day, working harder for less and less. So you got a choice, right? You can live. Dave Ramsey says it best: live like nobody else, so you can live like nobody else, right? Which means if you build your financial foundation, you have FU money, you can tell the world to screw off.
Yeah,
that's why you do it. You want to be stuck and be a good consumer and constantly be living above your means, the rest of us are going to get rich off of you. Someone's getting rich in the room. Is it you or somebody else?
Right? Someone's getting rich in the room. Is it you or someone else?
Mm-hmm.
That'll preach. That's good stuff right there.
I'm gonna put that quote up in my room, right here in the office. Right, you're gonna see that in my background in the show.
Well, John Maxwell, famous former pastor, now motivational speaker and author, he said that he said something similar. He said money is made during prime time.
Yeah,
money is made from 5 to 9 o'clock at night, and you're either paying somebody else money by watching watching TV. Hold on, I got a call coming in here. You're either paying somebody else money, watching TV, and generating ad revenue for them, or going out to eat or going to the movies, or you're working on your side hustle. He said, at the time he had written like 18 books. I don't know how many he's written now. It's like, I've written 18 books, and all of them were written during prime time. What you do between 5 and 9 is make yourself money or make somebody else money. And I thought, man, that's really good.
Yeah, it's true. That's good insight. It's good insight. So, Rocky, what's your forecast for 2021?
More of the same.
Get all your money into real estate, right? Like go all in. Now, I mean, yeah, more of the same. Just watch and adapt, I guess, right?
I think it's watch and adapt. I think at some point, right? Because if you think back to 2008, from peak event, or even go back to 2000, right?
Yeah.
From peak to trough was about 18 months. So it takes a while for us to get through the system. For us, peak is probably back in March, and even stocks have dropped, and they're back to even. Everyone thinks everything's okay. I think this time next year is when you're really going to see the downside as people start to lose jobs, as things happen. I think we're going to struggle again. That all depends on how much money the Fed throws out into the world, which I have no idea.
So we track unemployment here on a weekly basis. Like we look at the unemployment rates, we look at kind of the economy and where things are going. And even though like 700,000 unemployment, new unemployment claims a week, it's an awful lot. Mm-hmm. What we've also seen is the unemployment rate continue to drop slightly, but every week, slightly getting better and better. I kind of feel like as long as things stay open with this COVID stuff that everybody's talking about, if things can stay relatively normal, I think our economy is roaring back. Like I was one of the most pessimistic people all summer long, right? Like I'm like, oh, it's good. September 1st we're crashing, but sorry.
We are the ultimate consumer society. And I agree with you, but the question is, and I don't know the underlying numbers in real estate because I haven't watched. Yeah. We've had a moratorium on evictions, right? When that comes to an end, those are the ripples that are going to really start to hurt. You've got people who put their mortgage into forbearance. That's going to come back at some point. The opportunities are going to start presenting themselves. I don't know when that is. Is it a year? Is it 3 years? At some point, you got to pay the piper.
Mm-hmm. It's true. I'm not disagreeing with that, but everything. I mean, look, we have talked to eviction attorneys. We've been on the ground with a lot of this stuff,
mm-hmm.
and doggone it, Judah looked me in the face over the summer. He's like, dude, why are you so pessimistic? Like, what's the problem? And then we started really interviewing people that were related to the underlying elements. It's just not there. I mean, I think that we're going to have foreclosures next year. I think that'll happen. You know, I think that's pretty evident. But I don't know, man. Rocky, I hope that, I don't know.
I don't think Rocky's being pessimistic. I think what Rocky's saying is we're probably going to see some uncertainty. At some point, there's going to be a black swan event that's going to trigger a downturn. But Josh, I've been saying that there's going to be a downturn. I mean, the markets can't go up forever. I'm just not. Listen, like, there's a lot of people out there in, you know, the political punditry space and the economic punditry space who I like a lot of what they say, but a lot of what they say is also very doom and gloomy. And I just am not, I'm not saying that I hear Rocky saying that, but I just think we got to watch ourselves that, like, what Rocky said is be ready to pivot. Mm-hmm. So what I'm doing is I'm fully living in the moment. And right now the market is really great and I'm socking away cash and I'm fully living in the moment. And if the market shifts or the market changes, then I'm going to change, but I'm not going to change before the market changes. Does that make sense?
Makes total sense, but be ready to pivot. You can't have certainty in what's going to happen. So you constantly pivot and make sure you have your exit strategy up front. Yeah. Be ready.
All right. See, now it sounds like I was beating you up, Rocky. I'm sorry. Okay. I didn't mean
I don't mind. I'm a fighter.
We got to have Rocky on again.
Yeah.
We got to have, now that the audience knows who Rocky is, and we got to have Rocky on to give his news take on certain news events as they come out and as they happen, because I think that our audience would really benefit from hearing from Rocky.
I think so too. Rocky, if somebody wanted to work with you, how would they get in touch with you?
So they can email me. Mm-hmm. It's rocky@profitcomesfirst.com.
Okay.
And I have a podcast, it's Profit Answer Man. So we talk about how are you profitable. And then I have another podcast called Rich Your Soul, which is about how do you live the ultimate life? Because that's really what it's all about.
By the way, I love Rich Your Soul.
Yeah, you were a guest.
That's how we got introduced to each other. Like, what, 5 years ago, something like that. I love that podcast. You got great guests. And I mean, it's so cool pursuing the idea of, like, you know, pursuing your best life. You know, oftentimes we look for our best one part of life. Yeah.
And that episode was amazing. If you're a landlord, you've got to listen to that episode because we talked about systems and how to systematize your rental business.
Yep. Yeah, that was really good. Anyway, sorry. Anyway, guys, thanks for joining us. Judah and I will be back here tomorrow talking about the news of the week. Lots on the agenda. Rocky, we'll have you back again. Really appreciate it, man. Thanks again for joining us. If you like the show, don't forget to like and share, and join us tomorrow. Bring a friend. See you guys. Take care.